Imagine having access to the latest news at your fingertips. Introducing the newly rebranded and improved Daily Nation website. With our innovative online flipping page feature, you can read the newspaper just like you would in print. Plus, with our subscription-based model, you will get access to exclusive content, archives, and more. So why wait? Sign up now and experience the future of news. Daily Nation, now at your fingertips.
Good evening, our esteemed viewers, and welcome to the National Economic Indaba Show. To those that are joining us via our social media platforms on the National Economic Indaba platform on Facebook, and those that are joining us via Millennium TV on Facebook, and those that are joining us on Channel 95 on television on Topstar, you are all welcome to the program. Tonight we have a very exciting guest for you, and as we discuss a very engaging topic on fintech. Our guest this evening is former Natseva CEO, and this is Mr. Malcolm Chabala. Mr. Chabala, you're welcome again to the National Economic Indaba Show.
And thank you for having me, and good evening to our viewers out there. It's a pleasure to be here.
Great stuff. I have to thank you again, because you are a very busy person, but you've still taken time off your busy schedule to just come and discuss something very important that we are going to discuss tonight, which is about fintech. Now, Mr. Shabala, fintech, is something that is very a subject that is very known to you and a little bit known to me, but there could be, some of our viewers who are not very conversant with this very, posh word fintech. Could you just, tell us about fintech? Define it for us. What is this word that has come on the market that is, so posh but not so known to many people? What is fintech?
All right, thank you so much for that very important question, and it's a very important topic that we are tackling this evening.
Okay.
I think where to start from before I explain what fintech is just to recognize the fact that the world has evolved. We are living in an information age, in the digital age. So technology has developed so much that it is impacting all the facets of our life. So if you come to fintech, it's just a combination of two words, finance and technology. So it's not very complicated as it sounds. So it's just the use of technology in the provision of financial services, inclusive of banking services, insurance. It can be information about stock markets. So as long as you're using technology to access financial services, it is fintech. So it shouldn't be very, very complicated. And we use it every day. Every time you make that mobile money transaction, you're actually using fintech. Yeah.
Well, I'm happy that you have broken it down so simply, because a lot of people, when you ask on the street, they'll be like, "What is that?"
Yeah.
It sounds so complicated,
Yeah.
but actually very simple. It's actually just the use of technology in financial matters.
Yeah.
Great stuff, Mr. Chabala. Now, what are the most promising fintech innovations in Zambia, and how are they impacting the financial sector?
All right. So in Zambia, we've seen growth in fintech or digital adoption of digital financial services over the last, I must say, maybe 20 years, but probably has accelerated in the last 5 years or so. And one of the main catalysts was actually COVID. In as much as it was a very bad thing and a lot of people lost their lives, but remember, during COVID, we had lockdowns and things like that, and banks, some of them closed for a long time, some of them reduced the operating hours. So as a result, banks, but also mobile network operators and other fintech companies and digital companies invested quite a lot in technology because customers still had to be saved. So we've seen a massive uptake of digital financial services through the use of fintechs. So one of the most promising ones, one which has really made leaps and bounds, is mobile banking. So it's brought a lot of convenience. The way we send money to each other, the way we make payments, sending money to the village, even to our grandmothers, has really changed over the last 10 years or so. So I think that's the one which has given the country a major uplift in terms of digital financial services. It has contributed significantly to financial inclusion. The last FinScope report reported around 64%, 65% financial inclusion. And the major driver of that was mobile money and use of fintech platforms. So it's brought convenience. People no longer have to move with sacks of money. More and more vendors are accepting digital money or mobile money as a payment method. We've seen people, even those selling in the markets, whether you're buying tomato, groundnuts, they're willing to accept mobile money. Rent is being paid. You go to a hardware shop, you're able to pay. A number of supermarkets have started accepting mobile money as a form of payment. So it's the one that I see as the most promising one. Obviously, it's not the only one because you want many other financial services to get onto these platforms. So there are a number of apps now that have been rolled out. I was just hearing the other day under the Securities and Exchange Commission, you can actually buy shares on your phone.
Really?
So all that is fintech,
Wow.
right? So these things have become marketplaces now. We've seen people selling clothes on even on Facebook.
Absolutely.
Pay me by mobile money.
Yeah.
So shops have become online.
Has this affected in any way the traditional way of doing banking? Has it negatively affected the banks in a way? I don't know. I would like to find out.
Um, I would say it's been both. There's been an impact, positive as well as negative, but largely positive.
Positive.
Because I think for banks, they've realized very quickly that there's no point in competing with fintechs and mobile network operators. The buzzword now is collaboration and partnerships. So the banks are working with fintechs and mobile network operators because it's the same customers
Yeah.
that we save. So the way the banks have seen it is instead of trying to compete or take fintechs and mobile network operators as competition, it's to see them as partners. Actually, the good thing is that the fintechs and mobile network operators still need a bank because behind those transactions that we see, there still has to be a bank. There still has to be, a banking system. There still has to be physical cash money, which can only be deposited and transacted through the bank. So the banks have actually benefited through the activities of fintechs and mobile network operators as they are, uptaking more customers from the digital side. All that money at the end of the day has to be banked in a bank. So banks have actually seen increase in deposits. They've seen increase in revenues. What they've seen is maybe a drop in customers walking through the branches. Physically, because what I used to do in a bank, now I can do on a booth next to my house. So for customers, that's convenience. The cost of doing business has gone down. So the banks have actually benefited significantly, because then their operating costs have actually gone down, because they don't need to have a lot of people in the branch physically saving customers for simple transactions like a withdrawal, a deposit.
Right.
Those are being done
Anyway.
through fintechs and mobile network operators. Yeah.
Great stuff. Now, how can blockchain technology be leveraged to improve financial services in this country?
Okay, so that's a whole big topic in itself, blockchain, and we need to explain what that is before
Yes.
we go into how it can be used. So when we talk about blockchain, we are talking about distributed ledgers or databases. So they're decentralized databases or ledgers. What do I mean? So basically, this is just stores of information that are distributed and decentralized. So instead of this information sitting in one saver or in one location in one database, it's distributed across a number of platforms and across a number of computers. And the whole essence is again to drive the cost of doing business down. It's to improve security. It's to improve efficiency. And also it's to improve transparency as well, because the players who are using different platforms and accessing the same information have to have the trust that this information is legitimate and can be used for these transactions. So what has happened is that with the introduction of blockchain technology, a number of benefits have actually started accruing to financial service providers in terms of transaction processing. So transactions can be done using blockchain technology, but also it's not just for financial services. It can also be used in supply chain management. So dealings between vendors and consumers of their services, execution of contracts. All that is being done digitally instead of a physical paper moving from a company to a lawyer and being executed. Companies are able to exchange that information digitally and efficiently, and they're able to trust each other and execute those contracts and actually trade and release goods or services. So it's being used also in supply chain management, like I said. It's being used in the medical field in terms of capturing and storage of confidential patient information. And because you want to keep this confidential, so using blockchain technology, only those who are authorized are able to access the information or medical history of patients. So specifically coming to financial services,
Right.
so they're using blockchain. It's increasing in terms of its usage. Obviously, it's something new, so not everyone is using it, but a number of institutions are using it, particularly international ones and globally. So, like I said, the transactions are being done more efficiently, more securely, in a trustworthy manner, and it has brought about a lot of efficiency. So you don't need a lot of players when you're using blockchain. One of the interesting things which probably hasn't taken off in Zambia is off blockchain technology comes cryptocurrency. So this is digital money.
Yeah.
This is completely digital money. It's not like mobile money. Mobile money is backed up by physical cash, which is sitting in a bank. But with cryptocurrency, it's completely digital. It's generated digitally. It is stored digitally, and payments are made digitally.
No,
So
cryptocurrency is, a very interesting topic.
Yeah.
That a lot of people are a bit confused about. Could you, before we proceed, could
Yeah.
you just take a little bit of time and just explain this cryptocurrency and how the whole thing works? Because I have to tell you, it really confuses me.
Yeah.
Yeah.
So it again, it shouldn't be so complicated. So if you are using mobile money, and what you do when you use mobile money is you take your physical cash, either you
Yeah.
deposit it in a bank, or you deposit it at an agent of a mobile network operator. What they give you now in your phone, in your wallet, is electronic money. Right? So they give you electronic money, which you're able now to make payments, you're able to send to somebody, they receive. They're not receiving physical cash, they're just receiving a message and a credit to their wallet that you've received money. So it's this.
So that
it's
is
it's the
cryptocurrency
same.
still.
No, so mobile money is not cryptocurrency
Yeah.
because it's backed up by cash. You'll have deposited cash somewhere, either in a bank or a mobile network operator agent. You'll have given them cash to exchange for electronic money. But with cryptocurrency, which uses blockchain technology, which I explained, it's completely digital. So the vision is to have currency which is not physical. Yeah. So what happens
What
is,
would be the benefit of that?
so the benefit is obviously you don't have to move with mountains of cash.
Okay.
You don't need a lot of people to be counting cash tellers. You actually surpass the bank because you don't need the bank when it
Okay.
comes to cryptocurrency. You don't need Bank of Zambia or central bank when it comes to cryptocurrency. Yeah. So the benefit is that transaction become cost effective. They become very cheap because you're just using electronic gadgets and systems to move money around and exchange and make payments. So all those extra costs of paying commissions and fees to banks are wiped out, paying middlemen and things like that are wiped out. So that's the upside of cryptocurrency. So it's just money which is generated electronically, and unlike money which is printed physically. So it's generated electronically, and it is stored electronically. It is transacted electronically. So you will never see it physically. All you'll be seeing are transactions happening, balances increasing or reducing electronically. So it's just digital. So the whole idea is take out all the middlemen, take out the banks, take out everybody who's in the middle, so that the cost of doing business is reduced significantly. It's it's customer to customer, people to people, peer to peer, business to business directly.
And
No
it's
bank
it's
involved.
something that has been embraced far and wide.
Yeah, so internationally, yes, and I think at the onset when it just started, we saw a lot of uptake, particularly in the US, Canada, basically North America, and Western Europe and Asia. Japan, Korea, Taiwan, such economies that are advanced. But I think because of some scandals and some frauds that have happened on cryptocurrency, we've seen a reduction in the usage. But I think once the securities the security features are improved, we will see probably an increase. I've seen some central banks, even here in Africa, like the Central Bank of Nigeria, have started looking at that seriously. So it will come. I think the increase in terms of usage will happen. A good sign is in Zambia this year, checks will stop being legal tender. So we are slowly moving away from checks. I see cash slowly also being reduced in terms of usage. Mobile money is shooting up. So it will be, I think, a natural development for cryptocurrency to come in.
Right.
Yeah.
Interesting, very, very interesting indeed, Mr. Shavala. Now, how can fintech solutions increase financial inclusion in Zambia, particularly for the underserved populations? What are some of the examples of, before we get to the examples, just let's discuss, the financial inclusion in Zambia, particularly for the underserved populations.
Yes, so like I said, there's a survey which is done every after a couple of years, which is called the FinScope survey in Zambia,
Yes.
and I think in other countries as well. So that survey, tests how financial inclusion is increasing. So like I said, from the last FinScope survey, we were about 50% financial inclusion. Now we are about 64, 65%. So financial inclusion is increasing, and that increase largely was accounted for by mobile network operators or mobile money. So a number of things in terms of how it helps financial inclusion, because with the use of electronic systems and digital financial services, you don't need a physical branch, which is a huge capital investment for a bank. And in some of these areas, it doesn't make business sense to go and build a branch. So just by a tower existing there, an electronic bank can exist, right? So even in the most rural places where there are very few people, it doesn't make economic sense to put a branch in there. Just by a tower being installed there, and the Airtel money and MTN Momo and Zautel money becomes accessible. Yeah, so it's easy to scale, it's easy to deploy, it's not expensive. You don't even need people physically on the ground, apart from maybe somebody who's going to go and maintain the tower and make sure that it's working okay. But if you have a branch, you need a branch manager, customer service manager, you need tellers, you need IT people, you need CIT to be bringing cash with security vans. So the cost of financial inclusion has been brought down significantly, that each and every corner of Zambia has now been touched by mobile money. So everyone can have a bank account by a wallet. They can make payments. They can send money to friends and relatives. They can pay for services. So the cost of financial inclusion has been brought down significantly.
Is this now taking over people's jobs that you've just mentioned how there will be no need for people, there will be just a need for a network tower there, no need for some of those physical people to do.
Yes, I think one of the things that we need to accept is that the jobs of the future will be very different. Because of digital solutions and AI, artificial technology, machine learning. So a lot of these basic, mundane jobs will be done by computers and machines. So what we should be thinking of as an economy, as a country, is what are the jobs of the future? Those people who know AI, programmers, and people who are good at relationship management. Those are the jobs of the future, right? Just posting transactions and moving a file from one office to the other. All that will be digital in the next few years. It will be done by computers. It will be done by robots. It will be done by machines. But that does not mean that there will be no jobs for human beings, because there will be other jobs for human beings that will be created. For example, the programmers to write those programs and do the algorithms and things like that. There'll be a huge demand for such jobs. So people should be thinking like that. Yeah.
Great stuff. Now, what are some of the examples of successful fintech companies in this country that you could actually point at?
Yeah, the most obvious ones are the mobile network operators. So what they've actually done is they've actually set up separate companies. So if you look at Airtel Money, it's related to Airtel, but it's a separate company with its own CEO and its own structures. Same with MTN Fintech. It's actually called MTN Fintech. It's another company with a different CEO. Zamtel has also done the same. So they've got Zamtel Money now with a separate CEO. This, I think the mobile network operators have actually seen it, that this is a growth area. This is the space to be. This is where the money is going to be made. This is where the business is going to scale. This is where the growth is going to happen. So those mobile network operators, those are the successful companies that immediately come to mind. But they're not the only ones. If you've heard of Premier Credit, you've probably heard of Zamcash, Emro, and a number of other Emerald, a number of other companies that have come on board that are just using technology to lend out money, right? You apply electronically, either through the phone or a tablet or an iPad or your computer, and they send you electronic money to your mobile wallet. There's no physical cash involved. There's probably zero interaction in terms of physically you going to the branch, and you pay through electronic money as well in terms of repaying the loan. So those are some of the fintech companies that I can think of that have emerged and are really being very innovative.
Great stuff. Now, at the beginning of the program, I did mention to you when I asked you to define, what fintech is, that there are a lot of people out there who literally have no idea about what it is. So this question is, in relation to that. How can fintech companies ensure that their services are accessible to people with limited digital literacy? Because we have a lot of people,
Yes.
including myself. I'm sure by now you have noticed.
Yeah, so I think what we should be working on as Zambians is to become digital literate, because the language of the future will be the digital language. It won't be the way we are conversing like this. As you've seen, a lot of people now do everything on the phone, so you have no choice but to catch up.
Right.
The good thing about what we are seeing is that, and I'm very happy because even the elderly people, we've seen our grandmothers, our
Oh, yes.
grandfathers, they've become digital literate to an extent, because they can use the simple phone, the feature phone. A number of them are able to use the smartphone as well. They're very, very comfortable with apps and just tapping. But if you can't use the smartphone and the tablets, what these companies have done is not to leave anyone behind. So they've built solutions which work both on the old feature phone, which has buttons. It's called USSD. So you've seen, a number of adverts, saying, press star, a number, and then a hash. So you're able still to access the whole menu in terms of financial services. You can do transfers, you can make payments, you can save money, you can buy insurance, you can access a loan, even if you don't have an app, even if you don't have a smartphone. So the goodness is these companies are investing both in the basic technology, which is USSD, and the apps, as well as the ones where you need a computer or you need to go on the internet. So nobody's being left behind. But what I've seen is that the generation which is coming behind us, the younger ones, the Generation Z and the millennials, they learn computers from a very early age.
Yeah.
So as the population, as those become adults, they will already be digitally literate. Phone penetration in Zambia is 90%. So I don't think there's a challenge, because our grandparents are able to use the basic feature phone.
Great stuff.
Yeah.
So, Mr. Chavala, what regulatory challenges do fintech companies face in Zambia, and how can policymakers support the growth?
All right, that's a very important question and critical to tackle. As you would appreciate, the regulatory environment, regulatory systems, and the regulators themselves, they were built before fintechs, before digital financial services. So they were not purpose built to regulate a fintech. So what has been happening is that the regulator has been playing catch up. Various regulators, whether it be for banking, for the securities, or for insurance, because all of them have now to come up with processes, procedures to monitor and regulate these fintechs. But at the same time, the fintechs have been growing at a very rapid pace. So you find that regulation is chasing development in terms of fintech and trying to catch up. So I know that regulators have done quite a lot and put in a lot of effort to try and come up with systems, procedures, and processes within which they can monitor and regulate the fintechs. But the problem is technology is evolving every day. It's changing every day. So they're always playing catch up. But the good thing is that we've seen a lot of growth in terms of regulation. We've seen a lot of improvement in terms of regulation for fintechs. So the problem with that is that the fintechs may find themselves in a vacuum. They find themselves in a situation where nobody knows what to do. Nobody is ready to approve something because nobody knows about it. Nobody knows this thing. They're all learning. It's all strange to them. So what that means is that it delays the rolling out of certain things that the fintechs have been thinking of introducing until the regulator is able to catch up and feel comfortable that they can support such an innovation to be deployed in the market.
Interesting
Yeah.
indeed. Now, how can regulatory sandboxes be used to support fintech innovations in Zambia? What are regulatory sandboxes?
Okay, so it's related to what we've just been discussing. I think what I should mention is that obviously the regulators have been very keen to ensure that these technologies are landed in Zambia and that they start being used in a controlled environment, in a safe and controlled environment. What I didn't talk about from the first question is around policy and policymakers as well as government itself. So we've seen the restructuring of what we used to call the Ministry of Science and Technology. So it's now the Ministry of Technology and Science. It seems to be a small change, but it's actually a very important change because now the focus is on using technology in everything that we do. And then obviously that will support science as well. So we've seen that that ministry has been very, very active in ensuring that some of these innovative digital solutions are actually rolled out. There's a national digital strategy which has been worked on as well. So the government has set the tone, the policymakers have set the tone and have created this policy environment where digital financial services and fintechs can thrive. You've heard of Smart Zambia, e-government, where government service bus, where even government itself is digitizing all the services, whether you're paying for land rates, you want to do road tax or fitness, you can do that in the comfort of your home or your office, right? So you were talking about the regulatory sandbox. So what the regulatory sandbox is very simple. It's basically an environment which is created by the regulator where the fintechs or the innovators are then allowed to test their solutions in a controlled and secure environment, sort of a closed group, before it goes to the public, to everyone to use, so that it's tested. All the issues are dealt with, all the risks are dealt with, so that once it's proven to work in the sandbox, then now it can be released into the market. So it's just a testing environment that is created by the regulator, where they authorize a fintech or a digital financial service provider to start testing certain things or transactions before they can be rolled out to the market.
Great stuff. Now, what are some of the best practices for regulating fintech companies to ensure consumer protection and financial stability?
Yeah, so obviously from a regulatory perspective, the primary role is to make sure that the market is stable, that not too much risk is introduced in the market which cannot be managed, and ultimately the consumer is protected and safeguarded, and that they do not lose their money. So from a regulatory perspective, I think those will be the focus areas. They tick those boxes. Do you know what the risks are? Do you have controls to mitigate those risks? Is the residual risk acceptable? And then the regulator will give you now a clean bill of health or a go-ahead, a green light, to say you can roll out these products, whether it's lending money digitally, whether it's receiving deposits digitally. All those things need to be ticked off, before you are authorized to start offering those services. So best practice is to ensure that the systems are secure, they are safe from hackers, because there will always be hackers there, and make sure that if a cyber crime is attempted, it can be identified, it can be thwarted, and if it so happens, make sure that the impact is minimized and that it's stopped at the very earliest point of notification, but also that in future we are able to avoid such things from happening. So those are some of the things that the regulators will look at. So your technology, they'll test it. Is it foolproof? How vulnerable is it? So they'll do things like penetration testing. Can it easily be penetrated by hackers? And if they find weaknesses, they'll ask you to remediate those weaknesses before they can give you approval.
Interesting. What investment opportunities exist in Zambia's fintech sector, and how can investors support the growth of fintech companies?
There's massive, massive investment opportunities, and investors really need to jump onto these fintechs because that's the future. We've just been discussing how we'll be in a cashless economy very soon. So the first movers, those who jump on this opportunity early, will be the ones that are going to make money. We've seen it with Facebook. We've seen it with WhatsApp. They were the first movers, and you've seen how millions and millions, if not billions, of people are onto those platforms. And these companies are some of the richest companies that we know out there. They make billions and billions of dollars in terms of turnover. So this is a growth area. It's an area where if you're an investor, you should be putting your money in there. There's a lot of innovators out there that want to partner with investors. They've got the technology, they've got the brains, but they need somebody to fund them so that this technology can be taken to the market. The business cases are very, very good. The return on investment is good. And within a short period of time, a forward-looking, innovative, smart investor will make their money and move on and invest into other businesses. So there's lots and lots of opportunity. If you look at the number of people that have a mobile phone, they're in millions and millions. That's a captive market already out there for you to leverage, because you're not only selling them talk time, you can sell them everything, because once they get on the phone, they get on a smartphone, they become digital beings. They're buying on the phone, on the iPad, on the computer. So it's a blue ocean there. It's a whole room for opportunity that an investor can tap in.
And how can fintech companies partner with traditional financial institutions to promote growth and innovation?
So they're already doing it. Like I said, I think both of them, traditional banking financial service providers as well as the fintechs, are not seeing themselves as competitors. So all these fintechs that you see out there, whether it be Ting, it will be a 543 Consequence, it will be Airtel Money, MTN Money, Zamtel Money, they all rely on the traditional banks to facilitate their transactions. So they're partnering already. They're working together. They're sharing technology, and they know that the customer is shared. It's the same customer for the bank, who is also a customer on mobile money or on the fintech. So they are leveraging each other, sharing technology. They're also co-creating, where they come up with things together. I know Zanaco, I think, worked with some fintechs. They came up with a company called Pego, and they're working together. So a lot of the technology that you see in the banks is able to talk directly to the technology for the fintechs seamlessly. So you see the banks have apps. Within that app, you can go and do your mobile money. You transfer to your phone. You don't need to physically actually now move and say, I've withdrawn the cash. I'm taking it now to a booth. So within the bank app, you're able to engage with fintechs and mobile network operators. So they see each other as partners, and partners in business, and they go into things like revenue sharing rather than competing for that one kwacha. You see, how can we make two kwacha instead and share it?
Great stuff.
Yeah.
Now, what role can international partnerships play in supporting Zambia's fintech ecosystem?
It's very, very important. I see it in two ways. One is facilitation of cross-border payments, because now, we have things like, I think we've always had the old, money transfer schemes like or systems like MoneyGram, and the other one I'm failing to remember. But we've seen now the things like, is it Mukuru? So now there's cross-border payments. Even mobile network operators, in the terms of mobile money, you can send money to another country, whether it's Zimbabwe, Tanzania, SADC area, and things like that. So that's one area where Zambia now is integrating into markets such as SADC and COMESA, using digital platforms. So that facilitates trade. Cross-border traders now are able to use digital money to make those payments. The other way is transfer of technology. Other areas of the globe, areas of Africa, have sort of gone ahead of us. So we don't need to reinvent the wheel. If you go to East Africa, the fintech is highly, highly developed. Same with West Africa and South Africa. So as Zambia, we can just borrow that technology and do technology transfer, so that we also catch up, but not just catch up, integrate with those markets, so that we have seamless cross-border payments.
Now, what are some of the best practices for fintech companies to ensure, security and integrity of their systems and data?
Yeah. So the main thing that the fintechs and mobile network operators have realized is trust is very important. So you can only grow your customer base if people trust the systems. The systems are reliable, and the customer knows that they won't lose money. And if they lose their money, what recourse do they have? Can they report these cases, and will the perpetrators be caught, and they get a refund? So the very fact that fintechs use technology means that they open themselves up to cyber security risks. They open themselves up to cyber crimes because there are people out there that are plotting to use this same technology to defraud customers and to steal from customers. So the best that the fintechs and digital financial services providers should do is to invest in security, digital technology security. So things like firewalls, making sure that your antivirus is up to date, making sure that you deploy patches when you recognize weaknesses in your system. You patch the system, meaning you roll out better features on the system. So on a regular basis, they need to do vulnerability assessments. How vulnerable is the system? They need to do penetration testing. How easy is it for their system to be hacked? So once they learn that, again, work on finding solutions. So there are things like firewalls. There's systems like middleware to make sure that the software is protected from hackers and those who would want to perpetrate crimes. And they need to collaborate with security agencies. Once an incident has happened, make sure that the anti-fraud department at police are engaged. Regulators such as Bank of Zambia are engaged. Regulators such as ZICTA are engaged to say, we've got this problem and we are working to fix it, and working collaboratively in the market as players in the market, regulators, the police, and the fintechs themselves find solutions to these problems and assure customers that these systems are safe to use, their money is secure. So those are some of the things that they constantly need to invest in. Consumer education is very important. Don't compromise your PINs, your personal identification numbers. Don't compromise your access facilities so that you are protected. Because sometimes the compromise happens at the customer themselves. They are not aware. They release sensitive information which is used by perpetrators of crime.
Interesting. So I think that you would then say that the cybersecurity law,
Yeah.
Has come at a very correct time, so that it helps to curb some of these problems.
Absolutely. So we need to look at data protection and cybersecurity acts also from a business perspective and from a positive perspective, because they're not just being used for other things, but from a business perspective, it's to protect the customer. So once an attempted crime has happened or a crime has happened, what are the provisions in the law that will ensure that the perpetrator is identified, the perpetrator is arrested, taken to court and convicted, and the victims are protected and compensated. So those are some of the provisions in the Data Protection Act and the Cyber Crimes Act and the Cyber Securities Act that are positive from a business perspective and from a consumer perspective.
Great stuff. Well, thank you so much, Mr. Chavala, for having taken time off your busy schedule, to just come and discuss this very exciting and engaging topic, the topic on financial technology fintech.
It's always a pleasure, and I think the message out there is fintech has come.
Yes.
Fintech is here to stay. It's only going to increase in terms of its availability and usage. So it's a positive thing, reduces the cost of doing business, brings about customer convenience and efficiency in the economy. Thank you.
Great stuff indeed. There you have it, our esteemed viewers. On the show, we featured former NATS CEO, Mr. Malcolm Chavala, where we discussed all things to do with fintech. Thank you so much for joining us, and until Monday, when we bring to you yet another exciting guest. My name is Nakiwe Simpungwe, saying good evening.
Imagine having access to the latest news at your fingertips. Introducing the newly rebranded and improved Daily Nation website. With our innovative online flipping page feature, you can read the newspaper just like you would in print. Plus, with our subscription-based model, you will get access to exclusive content, archives, and more. So why wait? Sign up now and experience the future of news. Daily Nation, now at your fingertips.